Hello, I'm Terry Daniels, Director of Trust Investments with the Wealth Management Group at CNB Bank & Trust with your second quarter 2018 market update. Stocks remained volatile during the second quarter, but the major U.S. indexes finished in positive territory while international stocks fell due to the threat of tariffs. The growth-oriented NASDAQ led the U.S. indexes, up 6.31%. Tariff talks weighed on international stocks, with emerging markets down 8.66% and developed markets down 1.24%. Yields for U.S. 10-year Treasuries increased 4.8%, reflecting the Fed's intention to raise rates 3 or 4 times in 2018. Gold was down 7.3%, while the U.S. dollar was up 5.7%. Specifically, for the major U.S. indexes, growth stocks led the NASDAQ to finish up 6.31% for the second quarter. The Dow Jones lagged the NASDAQ but finished up for the period. The S&P outpaced the Dow for the period due to FANG stocks, Facebook, Amazon, Apple, Microsoft, and Google. As you can see from this chart, according to FactSet and Goldman Sachs, just 10 stocks contributed to all the gains for the S&P for the second quarter. While U.S. indexes posted positive returns, international markets fared worse due to tariff talks, with developing markets, as measured by the MSCI EAFE, down 1.24%. Emerging markets took the brunt of the decline, down 8.66% as President Trump followed through with tariffs on goods from China and Europe. We believe stocks remain expensive and don't reflect some of the headwinds through year-end. Specifically, tariff talks and trade wars hurt sales. Higher interest rates slow stock buybacks and hurt profits. And that leads to profit-taking by investors who are concerned about second quarter earnings and outlooks. So what should investors do now? First, have realistic expectations for returns. 2017 stock returns were more than twice the historical average. We should expect continued volatility near term as companies announce second quarter earnings and their outlooks for the second half. We recommend keeping some powder dry, that is, have higher cash balances of 5 to 7% to cushion from near-term volatility and to have some cash on hand to buy quality stocks at a more attractive price. Also, diversify accordingly based on your risk and time horizon. Stick to your investment strategy and don't chase returns. That means conducting regular investment reviews to make sure your portfolio's asset allocation is in line with your risk tolerance and time horizon. This typically means that the mix of stocks will decrease as the mix of bonds and cash will increase as you near retirement. But each person's circumstances vary. If your portfolio has become unbalanced due to recent market activity or your needs have changed, please contact a member of CNB's Wealth Management Group to see how we can help. Thank you for joining us.